Hey traders, Jason here from Levitt Brothers. So you can see the title of this video, is this a combustible combination? I'm going to show you a handful of charts by themselves. If each one was looked at individually, we wouldn't really have any alarm bells. They would just be charts that are moving up or down. But the combination of them is a little bit suspicious. So I'm going to go through them and essentially just ask the question, is this a combustible combination? Is there something going on out there that we just don't quite know? Because it doesn't make a whole lot of sense that all of this stuff would be playing out at the same time. All right, so here's the S&P 500. Okay, so obviously nice trend up, 2023-24, big breakdown. We got a rally here, or not a rally, but a bounce. Got rejected basically by the 21, huge tank. Rallied up again, got rejected by the 21, and now we're falling again. Okay, by itself, this is not a big deal. Yes, it's, the market fell like 20%. The S&P fell like 20%. It's happened dozens of times. Maybe the fact that it fell so fast is an issue, but a 20% drop is fairly normal. It's happened a lot of times. The market has always recovered eventually. It is what it is. The market goes up, the market goes down. Over time, the market does extremely well. But every couple of years, we get a bear market, so it's not a big deal. All right, let's go back here and just point something out. Notice the market topped in mid-February. So then you come over here in TLT, which is a 20-year bond. And you would think that if people are pulling money out of stocks, they're going to put them into bonds because they're a little bit safe. So here's like the market top was over here, and it actually is what happened. The market topped and started coming down, and bonds were bought up. Normal stuff. But in the last couple of weeks, bonds have fallen hard. Okay, so in the last couple of weeks, we have stocks are falling and bonds are falling. Okay, so there's no safe haven. Okay, you can't pull money out of equities and put them in bonds. Can't pull money out of like high risk stuff and put it into low risk stuff or zero risk stuff. Both bonds and stocks are falling at the same time, which is not very typical. Then, of course, if bonds are going to fall, interest rates are going to go up. Okay, and so here's TNX, which is a 10-year yield. It's most closely linked with mortgage rates. So when interest rates go up, people are going to have to pay more for loans, mortgage loans. Businesses are going to pay more for loans. So you get the stock market is coming down. So you think bonds should be going up, and then yields would be going down, which like softens the blow. The market's going down, but yields are going down. So it kind of, it dampens the pain. But instead we have interest rates going up. Okay, so like the market's going down, but interest rates are going up, which is like a double whammy. Then we come over here to the U.S. dollar. Let's see if I can get this. And the U.S. dollar has recently broken down. It broke 100. It broke down and is now trading at a level not seen since early 2022. And this just increases the cost of imports. Okay, so anything we import is going to cost more. Even without the tariffs, even without inflation, just the fact that the dollar's dropping, weaker dollar means more expensive imports. So it's just another whammy laid on top. Okay, market's going down. People look at their 401ks, not exactly happy. Okay, fine. This has happened before. They'll get through it. Inflation's high. Hopefully it comes down at some point in time. But then the dollar being weak is just going to add fuel to the fire and make it worse. Tariffs, of course, are going to make it worse. And so it becomes like a combination of like, wait, we have high interest rates, and then a weaker dollar makes prices of all the imports even more expensive. And on top of this, we have to deal with a weak market. Then here's gold. Okay, and you can see how gold based for a while and then broke out in 24, had a great year in 24, and in 25 here is accelerated upwards. So people pulling money out of stocks, and they're not going into bonds, they're actually going into gold. And then last one is Bitcoin. So Bitcoin, as you can see here, like moved up, consolidated for many months, moved up, consolidated, dropped back. But notice, for a while, Bitcoin was a risk asset. Okay, when the NASDAQ moved up, Bitcoin moved up. When the NASDAQ moved down, Bitcoin moved down. It basically moved with the market most of the time. It was nothing. It wasn't a safe haven. It wasn't anything that like the Bitcoin bulls would talk about. It literally was just a risk asset that moved pretty close with the NASDAQ. But what's happened recently, and this is the weekly chart, the last couple of weeks, as the market has been weak, Bitcoin has gone up. So it's starting to decouple from the market. Okay. So when you think about the market, the S&P is coming down, money's not going into bonds, it's going into gold and Bitcoin. And while this is happening, inflation remains high, weak dollar increases the price of imports, tariffs are going to increase the price of imports. It's a combination of stuff that to me just doesn't feel right. And I guess the overall message here is be careful out there because something just doesn't seem right now. All right, we'll see you next time.